What is up, everybody? Logan here coming at you with another video, and we're going to go over yesterday's trade in the Discord, which was for Friday. Friday was one of those really nice layup setups, and we actually got to double dip in the trade. And if you're like, Logan, what's double dipping? We put the trade on, then it went down, and it came back up to our strikes again, and we had the same criteria for entry a second time. Some people got out. Personally, I just held and just added more to my position to get up to that 6% of my account at risk. And then the trade ended up working out really well. So we're going to go over a couple things, and just really similar to the last videos. Do want to let you guys know the rolling video is in the works right now. I just have a couple things left to do on it, and that should be up tomorrow on Sunday. Tonight I'm going to the Notre Dame Clemson game. I got some tickets and from DraftKings for free. Super grateful for them, 40-yard line. So hopefully Notre Dame can upset Clemson. I'd love to see a good game. But let's get into this video going over the zero DTEs. And we'll head over to the checklist in a hot second. I do want to say I appreciate all the support from you guys on the channel. If you guys could leave a like. Let's comment what emoji should we comment today that you guys like? Let's do a football because I'm going to the football game. So if you guys could comment a football below, and like I said, I appreciate all the support, the subscribers, everything. I can't thank you guys enough. We hit our goal. Now our goal is 12,000 by Christmas. So I'll be hustling and getting these videos out more and more. So as we take a deep dive in today's video, we use this chart every day, right? This is our zero DTE entry guide, and our previous close on Thursday was 37.19. So our expected move was plus or minus 55, right? So that percent of the day, right, if we use the EM, is about a 1.5% move. So that only happens, 15% of the time we would see that get exceeded. Well, what happened yesterday, if we go over to SPX stock, we ended 5 points within the expected move after all of this wild whipsaw movement. And yesterday was like one of my favorite trading days we've had in a long time. So back to this guy over here. And, the first thing I do, right, is look, are we up or down, after doing the expected move math to see these entries, right? When I woke up, and right away I saw we gapped up, right? Well, what's the number 2 thing on the checklist? Did we gap up or gap down? Well, we gapped up. So if I go back to SPX, I put a call credit spread right in the morning with the Discord. And if we go to the strikes that I chose for that, if we go over here, I did the 38.35, 38.40s for 30 cents. And the 30 cents filled, some guys got 35, because this is over a 2 times the EM high, and it's a 3% move, which only happens 2% of the trading days. Now this info, Vance has taken information from the stock market since 2000, because that's when algorithmic trading became more popular. If you're somebody who's ever traded the stock market, you know that algos sit at a lot of specific levels where they either buy a bunch, sell a bunch. A lot of those happen to be like 3,800, 3,700, right? Where moving averages are, right? Things like the 20-day, the 50-day, right? We have a lot of algorithms set up there. So that's why we have this data to see what, how often do these moves get tested or become in the money, right? If you were to take like a trade that was 2% away, you statistically have a 91% chance, if you're 2% up or down on a normal day, that's only going to happen 9% of the time, right? So 9 out of 100 trading days will move over 2%, whether that's to the up or down side, which is tough to know, right? Like, you really don't know exactly what the day is going to bring, but you can set your odds up in your favor. So that's what we did yesterday. And so I said, well, if we gapped up, right, we got to play that gap fill at some point. So let's look at the call spread side. And I think the market within 5 minutes of open just started to fall down. And I thought we were filling the gap then. So we placed our trade at 38.35 because it's 3% up. And a 3% up move, right? That only happens, like I said, it was like, this says 3% of the time, but I place this up a little bit higher. So around that 2 to 3% of the time that a 3% or higher move would happen on the day. So we are just placing ourselves where the odds are decent, right? If you can get a 6% return on something that only happens 2 to 3% of the time, you're already setting the odds up in your favor. So that's what we did there. There was literally no premium at 3.5% up. Like if you went up to 38.50, you would have to go like 20 or 25 wide. And I think going 20 or 25 wide for like 20 cents is kind of stupid, because if you're only getting $20 for that much risk, like, and you have a day where it gets out of hand or you start stopping out more, you're going to have to continue to risk a bunch of money to not make a lot. But we're doing 5 wide, sometimes 10. So getting these 6% returns, you can really justify the risk when you're 5 wide, right? Just because you don't have as much money at risk as far as width to credit ratio. So what we did there, we got the fill, and immediately the market started to fall, right? Fell pretty close. I mean, that was a good 30 points in 15 minutes. And the trade was down to about 10, 15 cents. Some people took it off, and then it ran back up. And we actually end up slapping on more trades. And if we go to the Discord, right, and click back to the 0DT pumping iron, hey, I'm going to do some 38.25, 38.30s, and we're going to double dip on this. So that was at 10.19. And the double dip, pretty fun trade. We got filled quickly. Some actually filled at 40 cents, and I think the highest it got was 45. But I think that's all because I wasn't watching it as close then, because I'm a big fan of like psychological numbers. Like I wasn't even going to look at the position unless 3,800 got broken. Then I would consider watching, and that didn't even come close. Like that was 12 points away from it even testing it. And then here comes that big gap fill down, right? And we know 98% of gaps fill, right? You don't know if it's going to fill in the same day. Most of the time it does, at least in this specific bear market. And that, look at that plummet. Imagine if you had puts, was screaming puts to me at that time. But, being in a call credit spread was just as nice. Then we went and filled that gap. And then everybody closed out of that trade around noon for $5, right? We just paid the 5-cent debit to get out. And just so that shenanigans like this didn't happen end of day and like steamroll us, even though we were so far away. I'm just the type of guy that likes to move on with trades, especially I've been doing some mentoring lately. So, of course, if you guys would be interested in that, the link is down to email me. I think I did 11 hours this week with a handful of you guys, and super interesting, a lot of fun. I love hearing your guys' stories. So that was what was really curious yesterday for me about this market, was we got to double dip, and I love those. I love those days. And then the gap filled. I looked at putting a put credit on, but that whipsaw just had me thinking we could continue down further, and there's still gaps below that are open. So it's like, we could have taken out some other open gaps that we had from weeks ago, right? Just from all the crazy whipsawing that we've had. So that was one thing to see there that I wanted to touch on. Where's the VIX? The VIX actually is around like 25 right now. And that's what's really interesting about this current market, is just the VIX being kind of shrugging down now, but the stock market's still staying around 3,800. So I'm curious. I think we do jump from here. At least the VIX, I think the VIX will continue up, and I think the market should roll over a bit more just because the Fed is continuing to be super aggressive on hiking these interest rates. So did we exceed the EM yesterday? We did not, and it did not get exceeded on Friday either. So something just to keep in mind there. And then I'll take you guys to the TOS charts in a little bit, show you guys some support and resistance. Sizing. This week I went smaller because it was FOMC, but I did double dip and then get up to my 6%, the account at risk on Friday when I got that double dip opportunity. Showed the trade timing for you guys on those trades, both really solid fills up here, 37.60. And then what was the other one? 10.15. So right around here was the other fill. And we got a little bit more of a bump up, but then the rest of the day worked out pretty effortlessly for us. But this is like a layup setup. Like this is the type of thing that makes you want to put like 10 to 15% of my account in, but I know my decision making gets flawed and money's long term, so there's really no rush, right? Like if you have a lot of money today or a lot of money in a year, I remember some of my happiest days of my life when like I did not have the amount of money I have now, right? Because it's all relative. So that's one thing anyway, is like just be patient, because I knew I can just make up for it next week anyway. So then we come down to the risk management part. And since we've been so extended lately in general with these markets, even though we did come back to that trend line, I was prepared to roll us if we did break 3,800. And I'll talk about it more in the rolling video, especially with this trade, because this would be a perfect trade. But if we were to break 3,800, I would have rolled us up to Monday at 3,860, because depending on how far your strikes are away, you can move those strikes up that far in a roll to the next trading day for a small credit of like $5 or a small debit of $5. But giving you that distance helps reduce your risk, because your probability of success gets better the further your strike prices are away when you're selling options, right? I do want to let you guys know that this video is sponsored by Sounds of the World. I actually have been listening to this video throughout my work day. It's super nice and relaxing, just hanging out, you know, going through the work day in between meetings. So just put this on, help disconnect a little bit. So make sure you guys go check out Sounds of the World. I am subscribed if you guys would like to listen to really calming sounds to help you go to sleep, or also just through the workday, mainly what I do, because it's pretty nice to hop back and forth and go through the checklist, go through the trades, and just it helps me keep my emotions down. So make sure you guys go check out Sounds of the World. The link will be down in the description for that one. So back to the Discord really quickly, just wanted to show you guys those were the strikes. And then we got out by noon. So that was a really solid trade right there. And also the Discord is at its record amount of members that we've ever had. I'm so excited that you guys have continued to support everything around this trading style. You guys have been learning. So if you guys have yet to come join the Discord and you'd be interested in learning these trades, following along, the link is below, and I'll put that in the comments as well. And then I do run discounts if you guys want to sign up for 3 to 6 months, even a year at a time. And that can save you a pretty good chunk of money as well. So just wanted to let you guys know about that. And we'll hop over to the TOS charts to wrap this video up. There were two things on Friday that I was really looking into that helped me make my decisions when it came to taking these trades. And one of them was my 10-day, 30-minute chart that I love, that I always talk about. But this candle was super volatile, right? In general, right? Moving up, moving down, this 30-minute candle. But right when we opened up right into resistance. And then when I saw that selling start, I figured, hey, we have 3,800 and we have this 3,790 line right here. This is my blue dash line that I like to use for my resistance. And knowing that there's that much resistance up there, we put the trade on. Then we came back up and then we tried to break out of it again, but the candle closed underneath it and the rest of the trading day stayed underneath this. So right around that time we put the second trade on, right, was when this candle was coming up into my resistance line. So I used those two resistance points. And then I also took note that the advanced decline, which is the ADD, if you guys are not familiar with it, was declining all morning, right? So even at 9:35, this was showing that we were seeing some weakness. And then even when we got a little bit more of a bump up, right, still right around this time, I was able to be confident in taking some trades, just seeing that, hey, the market's going up. So we're seeing a little bit of, you know, divergence there because the advanced decline is going down, which generally signifies this is that selling, right? And there was that selling that came through right after. So really, really interesting to see these sort of candles and then see us right into resistance. We're still in an overall bear trend. So to me, this was a perfect layup setup. But that's going to be everything for me in this video. If you guys would like to support the channel, make sure you leave a like on this video for the algorithm. And if you guys would like to continue to support, make sure you subscribe because I upload these videos through the week. You guys can learn the strategy and then come hang out, see what you guys got going on. So that's going to be everything for me in this video. You guys already know I love you. Let's go Irish, take down Clemson, and I'll see you guys in the next video.